The two Canadian rail giants bidding over Kansas City Southern got some interesting news on Friday that the company has decided to go with Canadian National's bid. Now, if you're not familiar with the rail lines, we'll be discussing it a little bit further in this video, a little bit more about the financials, how it worked out, what Warren Buffett thinks about the financials. We'll also be looking at the past performance of both of these, Canadian National and Canadian Pacific. And then we'll see which one may be the best for your portfolio if this all goes through. But if this is your first time here, my name's Nick. And if you get some value or you learn something new, smash that like button for me. I definitely appreciate that. And if you haven't already, please consider hitting that subscribe button, turning that notification bell on. Let's talk about the rail. It doesn't get as much love. It's not a flashy, cool industry, but it is a main component of the infrastructure of North America. It has moved so much transportation of goods, whether it's t-shirts and consumer goods of containers coming in from the ports, whether it's commodities, whether it's oil. It's kind of the heartbeat to North America. It is cyclical, so it does do better when the economy is doing better. But what I want to point out here is that there's not many companies left. There's been a lot of mergers and acquisitions, a lot of consolidation that's happening in the marketplace. There's two Canadian companies left. I've mentioned them: Canadian National, that's CN Rail. Then there's Canadian Pacific, that's CP Rail. And then there's four companies in the US, one of which is Kansas City Southern, which both of these companies are fighting for. So Canadian Pacific originally back in March put the original bid offer out, and then all of a sudden CN saw that, their competitor, and they upped the ante. So let's take a look at this Financial Post article, break it down a little bit further. So we have here Kansas City Southern accepts the bid for CN Rail, $30 billion. Obviously, regulatory hurdles still remain, anti-competition and such. This is a $5 billion increase from what CP had originally made. They gave them the week to see if they wanted to counter offer. They did not. So this is kind of what's been going through. How this number works out on a per share basis plus cash is that CN has offered $325 per share of Kansas City. They also offer $200 in cash. And they also have, they'll be trading, one Kansas City Southern share will be 1.129 shares of CN. This is in respect or compared to CP's bid of 275 per Kansas City Southern share, and also $90 in cash. So, when you think about it, this is a no-brainer deal for Kansas City, trying to get the most money for the shareholders. We can see here that the CP chief is a little bit sour. Keith Creel repeatedly said that the higher bid was unnecessary, calling CN's offer fool's gold. Now, we did mention before that this will have to go to the Surface Transportation Board for approval. This is a regulator that wants the best for consumers, doesn't want these companies jacking up the rates. So that is an important component that we'll touch on later. Now let's talk a little bit about why CP was originally trying to get in and buy this company. So the merger would create a North American network touching the United States, Mexico, and Canada. Right now, CP Rail only goes as far south as Kansas. So this would kind of take over because Kansas City has a network that goes further south and then into Mexico as well. So it would give them a full North American network. But then on the CN side of things, they do go down as far as New Orleans, so they can touch kind of that ocean there, so they can move all the way down. But this would give them further access into the Mexican market. So both of these companies are basically ploying to get into Mexico, and this kind of play into the nearshoring theme. A lot of companies have been hurt by international supply chains, and they're looking at bringing some component of it home. Producing things in Canada is expensive. Producing things in the US is expensive. where else could you look to that has lower labor costs and shorter transit times? That's Mexico. So I think personally, that's my thoughts as to why these companies are battling to get in there. But that just gives you an example. And one of the hurdles that CN would have to overcome is that there are 7,500 miles that overlap with Kansas City Southern's network, which may trigger the anti-competition from the STB. So that is definitely something to watch out for. But on, going back to the financials, let's take a listen as to what Warren and Charlie, the GOATs, had to say about this merger talk, as they are the key stakeholder in BNSF, which is one of the U.S. conglomerates. Another one's U.S. Pacific. But let's just hear what they have to say.
Do you think the valuation that they're paying is worth it?
It's kind of play money to some degree. I mean, when interest rates are this low, and I'm sure from the standpoint of both CP and CN, there's only one KC Southern, and they're not going to get a chance to expand. They're not going to buy us. They're not going to buy the UP, and the juices flow, and the prices go up, and
they're buying with somebody else's money.
Yeah, it's somebody else's money, and you're going to retire in 5 or 10 years, and people are not going to remember what you paid, but they're going to remember whether you built a larger system, and the investment bankers are cheering you on at every move. They're saying you could pay more, and this is they're moving the figures around, the spreadsheets are out, and the fees are flowing.
So Warren makes note here that this is an extremely high valuation based on what the market is. Obviously touches on the fact that interest rates are low, but they make a jab here that it seems like the investment bankers are trying to make a little bit extra coin in this situation. I mean, at the end of the day, on one hand, you're not going to have any other company come and start building railroads again. So that infrastructure that we have is probably here to stay. So at what valuation can you really put it? If this company can truly be the North American railroad, then realistically, is there a price to that? Will they eventually be able to pay that off? Seems inevitable, but obviously Warren, coming from that value investing side of things, it's extremely crazy. Now, with that being said, there is a caveat in which, it hasn't been discussed too much about, but it's the premise that, CP had originally tendered the deal. And if Kansas City decides to break that off, then there is a massive penalty. So let's take a look at that. If voting trust is rejected, CN would pay $1 billion to Kansas City Southern. And if the trust is approved, but the merger rejected, then CN would be forced to sell KCS out of the trust. CN would also reimburse KCS for the $700 million break fee that it owes to CP to terminate the earlier deal. So basically, if things go sour and things turn awry, or even if it gets approved by the board, Kansas City Southern shareholders say, yes, let's go forward, but the STB sees anything wrong with this, they will have to pay essentially CP $700 million. That's crazy to think, when I think the revenue of CN last year was around 13 billion. So yes, may not seem like a large number in the grand scheme of things, but it is definitely a percentage of cash that you do not want to be giving to your rival. We also saw one of the biggest shareholders of CP, TCI Fund Management, write a letter to the CN's board asking it to abandon the deal because of the fact that this is such a large number that they could be poised to pay in penalties. So that was something that I found of interest, seeing like it was almost CN pushing the deal because the CP had originally put it in. So CN was like, okay, let me bump it up and then make CP pay more for it. But all of a sudden, CP is playing their game, holding out, saying, no, we don't want to. Maybe the STB will shut it down. So it seems like a game of cat and mouse right now. So realistically, as an investor, which one do you want to be playing? Now, let me start it off by saying, obviously do your own due diligence. There's not, it's hard to predict the future. It's obviously based on your own conviction. That's the only thing that's going to save you if the stock is down 20%. So now that I've said that, let's take a look at the past performance of both of the companies. So over the past year, we have CN Rail, Canadian National Rail, that is in blue. We also have Canadian Pacific in yellow. And it looks like they were following along the same trajectory up until this March to April period, when the deals start getting announced and all of a sudden investors start crunching the numbers and figuring out where it's going to go. And we can see here that Canadian National has definitely been on a downtrend since. So it seems like investors are happy if you're holding CP, and it looks like the CN investors are getting a little bit nervous as to what's coming in the future. If we zoom this out a little bit, a 5-year chart, we can get a better indication. Canadian Pacific seems to be doing a lot better on a percentage basis. You have them up over 187% in 5 years. You have Canadian National up 60%. Obviously not too shabby either way, but the clear winner here seems to be CP. But if you zoom out and you look at the overall picture, CN is definitely the huge winner here. And that's kind of where I want to break it down. First and foremost, again, these rails are not going anywhere. Nobody's building new ones, and they're a huge part of the infrastructure, moving massive amounts of goods around the country at economical, efficient ways. It can't be done moving one truck at a time. This is definitely a way to go for the environment. Maybe an electrical train to push it even further, but this is a huge component of the economy. I think right now with CN taking such a hit, there might be an opportunity to add some in there, but I think you can't go wrong with both of them. I think they're both adds into it. Obviously cyclicality to it. You can probably buy when the economy goes on a little bit of a slowdown, but right now the economy is rip roaring with everybody coming back online. So keep an eye on both of these names. I think they're an important part of a Canadian investor's portfolio. And let me know down below if you have a preference. Is there one that you preferred? Are you a CN or a CP rail person? Let me know. Hope you enjoyed the video. If you're still with me, please hit that like button. I definitely appreciate that. And if you haven't already, please hit that subscribe button, turn that notification bell on. I hope you all have a great week in the markets. Happy trading.